New numbers from the Labor Department show how the coronavirus continues to ravage the U.S. economy. More than 3 million Americans applied for unemployment last week. That brings the total to more than 33 million in just the last 7 weeks. Tomorrow, the federal government is expected to release a report that will show that unemployment across the country is as high as 16%. That's something we haven't seen since the Great Depression. Joining us now to talk more about these numbers is our financial analyst, James McBride. James, these numbers are staggering. I read today that the number of people who filed for unemployment in just March and April may exceed all the jobs created since the Great Recession. How are we going to get out of this, and how long is it going to take?
Well, it is going to take a while, Frank, and I hate to tell you this, but Neil Kashkari, who is the president of the Minneapolis Fed, was interviewed earlier today, and he said the numbers are actually worse than what they're expecting, and he thinks that the unemployment rate will go into the early 20s, 21, 22, maybe 23%. How we're going to get out of this, Frank, is we're going to have to reopen this economy as best we can. There's some encouraging signs. This has been done in South Korea and in Hong Kong, and there does not seem to be an increase in COVID-19 patients. But the number one thing is going to be reopening the economy as safely as possible.
James, do you see most of the people who are currently out of work being rehired, or are we going to see some people just losing their jobs for good?
Frank, that's a really great question because I think it goes to the heart of the distinction between the Great Recession and what we're going through now. Many of the jobs lost in the Great Recession were permanently lost, particularly for older workers. The people who have lost their jobs now, most of them overwhelmingly are temporary. For example, people that work in restaurants. When restaurants reopen, those people will go back to work. So it's a difference between a temporary situation, which is terrible, but we're going through right now, versus the effects of a permanent layoff of workers. And those are workers, particularly older workers, they never came back into the workforce.
President Trump continues to say that we're going to come back strong. Do you agree with what he's saying?
Well, we're going to come back, Frank, but it's going to be very uneven. You may remember that after 9/11, it took 3 years for the airline industry to come back to where it was pre-9/11. And it looks like we may be looking at a similar situation for both the airlines, the cruise lines, and things like that. They're going to take a long time. As I mentioned earlier, some of the businesses like restaurants, they're going to come back fairly quickly. So we are going to come back, but it is going to be uneven. And it's going to be a while before people feel comfortable going to a stadium, to a sporting event, or to a movie theater, or on a cruise.
James, do you see a fundamental change in the way we do business? In other words, do you think we'll see more people working from home after all of this is over instead of going into the office?
Absolutely, Frank. That's going to be one of the major impacts of this because we're finding out that a lot of people can work from home. A lot of people like working from home. And I think that's going to continue. Up here in Sonoma County, for example, Santa Rosa Junior College just announced that the fall semester is going to be entirely online. So it's not just the workplace, but it's also education. So many aspects of our economy are going to change with people working at home.
James, finally, let's talk about the stock market. Why was the market up today, given these unemployment numbers? And what about all the people who've lost a ton of money for their retirement? Are they going to make that back?
Well, the only people that lost money, Frank, are the people that took money out of the market. And those are the people that lost money. Unfortunately, that's a lot of people and a lot of money. The largest exchange-traded fund in the United States follows the S&P 500. It goes by the symbol SPY. And $22 billion have come out of that fund so far this year, almost $10 billion in just the last 30 days. So if you take your money out, you're going to incur those losses. If you stay, you're going to be okay because this market will come back and the market will exceed its former highs. It always has, and it always will.
All right, James, we'll leave it at that. Thank you so much for your insight tonight. Appreciate it.
Thank you, Frank.